If the trade doesn't make sense to you, if the buy doesn't make sense to you, if the transaction does not make sense to you, then you don't have to get into it. You only buy when it makes sense to you. You only transact when it makes sense to you. The name of the game is when your parameters line up and it gives you signals to start to come in, then that's when you start to transact, and that's when you start to buy, and that's when you start to position. Hey guys, so as you all know, I've been investing in the stock market for almost 15 years now, and over the past 15 years, there are certain things that I picked up, there are certain things that I learned that have helped me, and some of those things I've learned from painful experiences, and some of them also from things that I've seen along the way to help tweak my strategy. And the whole goal and narrative of this video is I hope I get to impart timeless principles to all of you, that as you start learning and as you start maturing in the world of investing, that these principles help you so you don't have to do the mistakes that I've made, or as you're starting out, you start from a bigger and better platform. Because at the end of the day, that's the goal of this video. That's the reason why I keep doing videos like this. The goal and the narrative is to continually grow this generation of investors so that you guys do massively better, and especially for those who are 10, 15 years younger than me, that wherever you are right now, you start off from a better footing than me. And when I started, I would always tell people that I started in my early 20s, and at that time when I was sharing that seemed like a very, very young age. But what's interesting now is with the advent of a lot of those $1 platforms where people can start investing in the stock market, what's nice about that is we've seen a lot of people start to invest, and it's starting to explode, not just in the US but also here in Southeast Asia. Now, that being said, how do you know which stocks are you supposed to avoid? To make it super simple for all of you, looking at it from a fundamental analysis perspective, looking at it from an investor's perspective, you have to make sure that the company that you're investing in is actually making money. They have revenues coming in, that they're actually doing well in their particular sector. Now, allow me to unpack everything that I said. First of all, revenue, sales. I want their revenues to be growing. I want it to be increasing, because if you try to look at it from a business perspective, why would you want to invest in a business that its sales is not increasing on a yearly basis? It doesn't make sense if you're gonna invest in a company that the sales is going down, maybe because they're being beaten by another technology, or maybe their competitors are better, or maybe because consumer behavior is actually shifting. Please remember, every time you invest in a company, in a stock, look at it from a business point of view. You should never invest in someone or a company that you know that they're not actually growing anymore. They're eaten up from a sales point of view. So look at it that way. Look at how they're actually earning on a yearly basis. It's very important that their sales are growing, because it tells you that they have customers, but their previous customers are going back, or they're getting a newer base of customers that will continue to buy their products or service. That being said, also zooming out a bit, I would also like to look at companies that will stay relevant, that the trajectory of their business is something that over a course of time, what they're actually doing will be highly relevant. So I'm gonna say this over and over, that we're not going back from where we are right now, 2022, as time would continually progress. It's just going to be the narrative that every government, companies would just go and find ways on how to make the earth more sustainable. They're just going to find ways on how we can live sustainably here that is not harmful for the environment. By 2040, 2050, 2060, no one's gonna say that, oh, let's go back to fossil fuels, let's go back to things that are harmful for the environment. We're not going that way. So if you're investing in a company that, looking at it from a trajectory perspective, you want companies that are highly connected to things that are making it more sustainable to live in Earth. And that's why also I've been a big fan even of Tesla, in spite of the volatility that's been going on in the stock, because that's a direct play into something that's renewable. I'm a big fan of how they actually are disrupting the space. So that's one example. Or you can also go into energy companies that are specialized into solar, or companies that are specialized into hydro. So things like that. There's a lot of iterations, but in the grand scheme of things, the name of the game is to look for companies that will be relevant in a macro perspective. So avoid the ones that will just be disrupted via technology. And that's why over and over also I've been talking about, look at companies that will allow payments to be done borderless in a very, very fast way. And if you look at how technology has evolved over the years, it's the ones that adapted, it's the ones that were part of the technological shift that did very, very well. Those that did not follow or did not go with the times were relatively left behind. So if you want to get a clue from everything, everything's going to the internet. Storage, data, communications, media, payments, everything is going in the internet, regardless if it's in 2D form or in 3D form via the metaverse. When you are in a situation where that company is not adapting, then probably also they will be disrupted. So companies to avoid, you don't want companies that are not evolving, companies that are stubborn in their ways, that they're not shifting and adapting to the times. And if you try to follow the model, one good example is Disney also. They're making a lot of money from their movie films. They're making a lot of money from a lot of their traditional businesses. But they saw Netflix getting a piece of their pie, that everything was headed digital. So what did they do? Disney also created their streaming service, and that's a very, very good way that instead of allowing the competitor to disrupt them, they disrupted also their entire business model so that they remain relevant. So companies that will not remain relevant over the next decade or so, you should not be holding on to them, because as technology continues to shift, they will be one of the biggest hit. So macro, you don't want to be holding companies that are not flexible, that are not evolving and changing and shifting with the times. You don't want companies whose their sales are not really doing well. I know I've been saying this in a lot of videos that I'm a big fan of companies with very, very strong brands. That it doesn't mean that if the company that you're investing in doesn't have a very, very strong brand, it's not gonna make it. But what I'm saying is there's a bigger chance that companies with very, very strong brands will do better than companies that don't have strong brands. And I've been talking a lot about the metaverse over the past few months, and it's seen that when Nike, Adidas, Atari, The Walking Dead start building and branching out in the metaverse, it builds a level of credibility because they've already built that solid brand that people are massively aware of. Now, I want to say this for people who are trading, how to figure out stocks that are worth avoiding. You don't want to buy companies that are in a downtrend. You don't want to buy companies that are breaking down. You don't want to buy companies that they may look cheap over the short term, but what's cheap can still become cheaper. I'm not saying you don't buy companies that are low. I don't mean you don't buy companies that are undervalued, but if you're in it to trade, then while it's breaking down, while it's falling, while it's in a downtrend, then it's not worth picking up. It's not worth getting into. It's not worth to catch a knife while it's actually falling. The name of the game is, if you want to stack and you really believe in the fundamentals, then the reason why you're buying it is because you have a certain price point, and once it hits that price, you're already okay with it. Then you start to come in. But if you're in it to trade while it's in a downtrend, avoid it and wait for a strategic reversal before you start to come in. Lastly, I want to say this. If you are a very price sensitive investor, then it makes sense for you also to be sensitive with what its valuation is. If it's priced higher, either via PE multiple or via price to book ratios, if you find it from that level to be very expensive, then just wait. Don't buy it. Don't buy stocks based on your analysis that if from your analysis they look expensive already, then you don't have to enter them. You don't have to come into that position. You don't have to buy every time in the market. You only have to buy when it makes sense to you. You don't. That's what's nice about the stock market, and I love Warren Buffett's analogy for stocks, that in baseball, you only swing the bat for a pitch that you know you can hit. And our biggest advantage for us in the market is that in the world of baseball, if you don't hit it and then you get 3 strikes, you're out. However, in the stock market, you have an infinite number of possibilities also to get in. So if the trade doesn't make sense to you, if the buy doesn't make sense to you, if the transaction does not make sense to you, then you don't have to get into it. You only buy when it makes sense to you. You only transact when it makes sense to you. The name of the game is when your parameters line up, and it gives you signals to start to come in, then that's when you start to transact, and that's when you start to buy, and that's when you start to position. If there's one thing that I'd like you to get, and I know you've been hearing this in my channel over and over, but companies that you should avoid, if you know nothing about the company and it's just talked about in social media, if your friends are talking about it but you know nothing about it, then don't buy it. Please remember, when people say it's a once in a lifetime opportunity, that's not true, because you will always have an opportunity also for you. You will have your time in the sun, and if you try to force it, that's when you start to lose. What are the stocks that you're supposed to avoid? Stocks that you know nothing of, even if everyone around you is talking about it. Companies whose sales are dropping, companies that when you look at it from a macro perspective, you're actually losing out already, because that's not where the world or the economy is actually headed. Companies whose valuations are very, very expensive already. And last, companies that are breaking down, or companies that are in a massive downtrend. Wait for it until it starts to reverse. So I hope you guys got a lot from this. If you want to learn more about this, I have a live Zoom course happening this March. Links are in the description below. I have books down below as well. If you want to invest in the US market, in the crypto market, we have a lot of options to offer you. If you want to enter the metaverse as well, we have a lot of options for you guys. So I hope you guys got a lot from this. I hope that this was something that was insightful. I hope that this is something that helped you. And this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.